All righty, we are live. This is the first time that Shawn and Fortis Mortgage has done something like this. So, Pete, like I mentioned, you're the guinea pig. So, thank you for that.
Yeah, absolutely. Happy to appreciate you having me on today. So that's honor to be the first one with you. So
Yeah, but you know what we're doing, you provide tremendous value. I remember meeting you when I first got into the broker space. Wow, this was what 2018
yep.
at the AIM conference in Vegas, and we started talking a good bit, and we ended up connecting, and I've been referring people, and connecting you with people over time. And I really like the way that, you guys help us out. And so, like today, I've been texting people about this live, and I'm saying, hey, listen, it's not just about credit repair. It's not about, having bad credit. Just really like tips and tricks on like misconceptions that we see out there.
Yep.
One of the biggest things that I'm seeing right now is the market hasn't really figured out which direction it's going to go. Like, are rates going to be low or rates going to be high? Is the stock market going to do well? Is the stock market going to do bad? So, for instance, what I'm seeing right now is I really think that consumers should be prepared so that they don't get negatively affected by volatility. So, for instance, I've had clients that they reach out to me in the morning and sort of hem and haw about doing an application because they don't want to get their credit pulled because it's going to mess their credit up, and they want to do some more rate shopping and such. And then by the time the next day that they reach back out to me, that rate doesn't exist anymore. So right. It's not a scare tactic, but it's really something that's happening in the industry. So one of the things that we talked about when we first started chatting about doing this live, Pete, was we talked about like 3 keys to credit success, and yep. the first one was about the credit inquiries. And so, can you help us? I don't want them to hear it from me because I tell them exactly what I'm reading online and what I get from professionals like yourself. But can you tell us how that affects your credit, like getting your credit pulled, and what the whole credit inquiries mean to the consumer?
Yeah, absolutely. A lot of times we do see a lot of confusion in the marketplace, and they're going to their loan officer, the person that they trust the most, with their financial situations, and a lot of times they don't want to get their credit pulled. People for years and years and years have had this misconception of, if I get my credit pulled, it's a hard pull that's going to drastically drop my credit scores. And unfortunately, that's just not true. So it makes, your job and other loan originators and brokers, much more difficult to get them to commit to do that, to actually see a real life snapshot of where that person is, which is really important. So what actually happens is it only affects your score a few points. So I would probably say, 2 to 4 points is probably what it would drop your score. And as most people, if you're monitoring your credit at all on a monthly basis, millions of people do not. But if you were doing that, you would see a fluctuation of that anyways, based on numerous things. The algorithm is changing, with updates coming up here soon. And your scores go up and down based on credit card utilization, which we're going to talk about in just a second. But overall, I would highly suggest, doing a hard credit pull, do a full application, because then you really know exactly where you're at. It's not this, credit monitoring companies out there. Everyone's familiar with some of the big ones, that advertise on TV a lot, but those are just consumer scores. They're using Vantage models and other models. They're not what you see. So when you're looking at that stuff and monitoring those things, you might be 30, 40, 50 points higher than what the FICO model is that you guys are required to use by law to do the loan.
Can you say that one more time? I get it all the time. Like I'm speaking to someone and I'm asking them about their credit. Like, so, one of the questions is like, what's your credit like? And it's fine. And someone will say, well, I have the last time I checked, it was a 750. So in the back of my mind, I'm like, okay, that's great. It's an awesome score. But I tend to drop it down about 30 points, anywhere between 30 to 20 points. In some cases, it's right on, or it's even lower, like from the consumer piece. But can you say that piece one more time that you just mentioned about the consumer piece?
Yeah, I shoot videos a lot on our side. Being in the credit world, on a daily basis, I have the same conversations probably 2 to 3 times at least a day where consumers think, what they're pulling on, for instance, Credit Karma, which does a good job of monitoring credit, the items that are on there. I think that's important to look at what's on your credit report. But when it comes to, is that, let's say the Vantage 3.0 consumer model, that's weighed a lot differently because, FICO is weighing things because you want to borrow hundreds of thousands of dollars from the institution that you're trying to get that loan. Where the consumer models are maybe thinking you want a $500 credit card or, $5,000, $10,000, $15,000 car, or so you can see why you have to have different things in place because the risk is going to be tremendously higher to borrow, let's say $250,000, $300,000 compared to someone that wants to open a $500 credit card. So those scores are going to always be typically inflated about, I always say around 30 points. So that's why if you think, hey, I'm a 640 credit score, 650, a lot of times, your lender is going to pull something. It might say, oh, you're closer to 600 than the actual 640 where maybe your first goal was. So, that's why you got to do a hard credit pull sometimes just to get a true accurate snapshot of where you're at, because FICO is what you have to go by to get a home loan. If you want to, use other models, that's fine. But to get a home loan, you're going to have to play by the rules.
Got it. So for everybody that's just joining, if you feel like you go ahead and place comments in here, any questions that you might have as well. But so the first piece that we talked about were the credit inquiries. Inquiries. That's a hard one to say. Some people say inquiries, but I have a hard time saying it that way. But anyway, you can get your credit pulled. Okay. So the algorithm knows that you're doing mortgage shopping or you're shopping for a car, or credit card and whatnot. And as long as you do it within a certain period of time, it's okay. So you heard that from Pete. So if I tell you that, it's the law. So the next question. So we're going through, obviously. So I'm here now. I'm not sure if anybody hears any background noise. I have a bit of an audience because I'm in my basement doing this live, and my son, he's playing a video game and he's watching what we're doing here. But like, these are unprecedented times right now, with the social distancing and the things that are going on with the coronavirus, and folks are going to be impacted financially. And so, Pete, when we discussed this, we talked about short term versus long term, and so I think it's important that we understand, as it relates to credit, having a long term strategy. And one of the things that I think is super important that I've that I know when I talk to people about is the optimizing your credit utilization. So we talked about like the proportion of your balances versus your credit limits on credit cards and such. Can you talk a bit about the credit utilization as well and how that affects your credit?
Yeah, absolutely. I mean, building credit long term really comes down the credit algorithm, especially in the FICO. 35% of it, which is going to be moved up here pretty soon, I think, this summer. They're coming out with a new model for FICO, but they're going to lean a lot heavier on time payments. So it might even trend up into the 40% or above. How much that's going to make up? People that have lates, it's going to hurt you a little bit more. So people that are paying on time, that's awesome. So as you start building long-term credit card utilization is going to be very important. So right now, a lot of consumers that come to us, there's usually two things that are happening. Either they don't have credit cards because they've been closed out or charged off, or their credit cards they have open are utilized too high. So anytime you have, balance to limit ratios where you're using over 50% of your available credit, that's going to be looked at as a negative. You're not going to get as many points in that 30% of the algorithm. So the key is, to build long-term trade lines, revolving trade lines, you can have, 3 or 4 credit cards open because those are going to be around, you can have credit cards for 10, 15, 20 plus years that you're building strong trade lines. Where if you have, car payments are going to come on and off, other short-term, installment loans are going to come on and off your credit. And to have an accurate and good snapshot, you want to have those long-term trade lines. And overall, you want to keep them below 30% utilization. Then it flips, so if you have high maxed out credit cards and all of a sudden you get them down to where you're using 30% or less, that's going to turn into a positive for you. And you're going to see a nice jump. So that's always the first thing that we talk about with clients is let's look at how many credit cards or how many charge cards you have open. Ideally, you want to have at least 2 or 3 that are giving you positive points on a monthly basis, because without that 30% chunk, it's very difficult, especially if you have negatives on your credit report, to get to the 640. For sure, to get to 700-800 and above, you're going to need those long term to build credit. So, as people are trying to, stay as financially stable as you can, it really comes down to having good long term trade lines.
Okay, so real quick, I got a couple comments that came through. So one of the questions is it true that your credit score won't go down as long as your credit is on the same trade line?
Can you say it one more time?
So let me see if she's saying it right, but it's a good question. Is it so? Will my credit score go down, right? As long as your credit is on the same trade line. So I'm assuming that means like utilization. Um, Actually, let me step back. I'm going to ask her to be specific about what.
Yeah, you have to clarify. I mean, the key is to have, if you're using credit cards, you want to make sure that you have a couple open, because they look at the credit to what your balance to limit ratio is. That's what the utilization is.
Mm-hmm.
And so let's say you have $1,000 credit card. The key is to only use $300 or less of that of the credit that you have available to you.
Right.
If you're doing that every month, you're going to get positive points. So if you had a second card, they would also give you positive points if you kept that utilization, the balance limit ratio below 30%. So it's important to have multiple cards.
Got it. So the one question from the same person that came through: no, if you're shopping for a mortgage and you go to other lenders, that goes back into the first piece about getting your credit pulled. Mm-hmm. As long as you do it within a specific window, you can get your credit pulled several times, as much as you like, as long as it's done within that certain period of time, and all those credit pulls count as one. So
yeah, correct. So what will happen is, if you're out there trying to figure out, to get a loan and you have a couple in-inquiries done, basically FICO has rules out there. So if you're shopping for cars, I believe now it's 72 hours. So if you're going to they're going to look for financing for you if you're shopping for cars and go to different places. So you might see like 7 or 8 inquiries pop up on the credit report. Mm-hmm. And they will show those that there was 7 or 8 inquiries, but they only impact your score once. So they're only going to count as one hard inquiry, even though you might see, 7 or 8 that show up on the credit report. When it comes to mortgages, same thing. I think they actually extend it to, at some point it was 14 days. I think now it's actually 30 days, where as long as you're looking for a mortgage, they can see that. They might have multiple inquiries show on the report, but it only impacts you one time. So that is a misconception. If you want to find the updated stuff, if you go to fico.org, I think you can see the rules pretty clearly depending on what you're shopping for. So
fico.org.
I'd have to double check it, but if you type it, the FICO credit rules or fico.org, they have lots of good information free information on there. So
got it. And so, like, our last question before we get into other questions from the participants here, is it's based around charge-offs. So again, just only speaking based on our experience. We'll be speaking to clients, and they, when you ask them what their credit's like and, how you can help them, well, I'm going to pay this and I'm going to pay that. And I know my credit's going to jump up right after I pay that collection. I used to think that was okay before I got into this business and saw how, things like that could potentially affect your scores. That's a mistake to pay off collections, right?
Yeah, I mean, the number one mistake I would say, the conversations we're touching on today are the biggest mistakes people make is the utilization piece, because it makes up 30+% of your score. But then every single day I have at least 1 or 2 conversations as well about people are trying to do the right thing that are fixing their credit. So if you're in the 500s, you're in the low 600s or mid 600s, trying to get your scores up as high as possible to get the best home loan rate. The key is, what we do with full service credit repair at My Credit Guy is our goal is to get rid of the negative ratings. So consumers out there, unfortunately, there's no way to learn this stuff except typically the hard way, unfortunately. When something goes to collection or a charged off status, or people write it off as a profit loss item on a credit report, those carry a negative rating. It's called the MOP rating system. On Credit Karma, on consumer scores, they do not show the ratings. Only on when a lender does a hard pull can you see the ratings. but they are there, whether you can see them or not. If you're going on like a consumer, trying to find a consumer score, you just have to look at the payment status. So if it says collection, charge off, profit and loss, anything besides current, that means it has a negative rating that's holding that score down. So to kind of touch on your point, what people are doing is they're going out, and let's say you have small medical collections or other things out there, you're paying them off because maybe you got a tax return or you come into some extra money. Right now it's difficult, obviously. But once you have some money, people do want to do the right thing and pay those debts. Well, unfortunately, when you pay a debt off that has a negative rating, more times than not, it's not going to eliminate the -9 MOP rating. And so what you have to do is go through the proper way to get, go through as many ways as possible. That's what we try to help consumers do to get rid of the rating or get it updated. And so, for instance, instead of just paying something, if you did go do that, all what's going to happen is the -9 rating stays. The person that sent you that collection letter or settlement letter is going to update the credit bureaus, but they're only going to update the balance. So if you read between the lines, when you get letters from these companies, they say basically, hey, we'll update the bureaus right away and take care of this, which they do update the bureaus, but just with the balance. And then the -9 rating stays, and almost a double whammy, the statute of limitations and how bad it affects the credit algorithm goes by the date of last activity, not when the item was opened. So if you go pay $5, you do a settlement, you paid in full, trying to take care of something, you're going to update the date of last activity to today's date. And now we just really reopen the wound. So the key is to absolutely not just go out and just pay all your old debts off, just by paying them directly or settling with companies. You want to first make sure that they are accurate, because a lot of times there is inaccuracies on credit reports. I talk to a lot of clients where they don't know where some of the stuff came from. So I tell clients all the time, like, don't pay things that aren't yours. That doesn't make a lot of sense. Make sure stuff's accurate. At least, spend 30 days doing that. Make them verify that debt is accurate. And then what has to happen next, plan B, if they do show that it is accurate, verified debt, which sometimes they can't do that, so it gets removed and that rating goes away as well. Then you want to go to plan B, which is called a pay for deletion negotiation. So that's really the important piece. You need to negotiate that the item's going to be deleted, and they'll issue you hopefully a letter saying that before you pay them. Because if not, the negative rating stays, and now you're actually in a worse situation. Or the only thing you're going to be able to do after that is just let it time heal, which can take some time, significant time, a lot longer than doing the pay for deletion.
Got it. And so there was a really good question. If the creditor takes it off completely, will that increase your score? That's the goal, right? That's
yeah, absolutely. If the creditor agrees to delete the item off the credit score, then that gets rid of the negative rating. So that is what's important. The thing I see a lot of times, though, is creditors will tell the consumer anything they want to hear on the phone. If you're just talking to them, they'll say, hey, yeah, just pay us and we'll take care of it. Or they'll use just quick language like that. And then all of a sudden you pay them, you never got a letter saying, or a settlement letter saying they were willing to do that. And now you call them back saying, why is it still in my credit report with a -9 rating and 0 balance? And they're going, oh, we can't delete it. We just said we'd update it. So you got to be really clear that, try to negotiate a pay for deletion to go, make sure that that's very clear before making any payments to a company, or else you're going to get stuck in that situation, which is extremely frustrating for consumers to realize, hey, I paid thousands of dollars to settle my debts and I still have a negative item on the report. So,
yeah. And then about how long does that generally take, that process? So like once it's completed, like how long does it take to show up?
Yeah, so if you do negotiate a pay for deletion, what you do is you'll have to send in for the clients, show the paid receipt that it was paid. Sometimes the creditor or the collection company will issue a letter saying, showing that the negotiation was accepted, and say, hey, yes, please delete this item from the bureaus. So we'll then send that in, and you do have to wait by law about 30 days for the credit bureaus to update that. You can do a rapid request to try to do it in 21 days. But after it's paid, and the pay for deletion was negotiated, then you can send that in. So that's kind of the normal timetable. But for us, it's really spend 30 days, make them verify it is accurate debt. If they do that, great. Then we can move on to the pay for deletion negotiations. If they can't verify it as accurate debt, it'll get deleted by federal law, by the FCRA laws and requirements protecting consumers from fraudulent companies. And then if they won't do pay for deletions, I mean, the only other last step would be potentially do a real settlement with them, which we help negotiate. That's the last thing we want to do because we don't want to up that data last activity. But we do that sometimes, and then see if we can't challenge, the rating after that. So,
got it. So, and if this is outside of your scope, obviously don't answer the question. But during times right now, we're going through some very difficult times. People are losing jobs and just financially strained. And so, what are you all hearing about, or is there any advice that you can give to someone in regards to like their current debt? So if they're losing pay, can they notify their creditors to let them know that they're being affected by the coronavirus? And what advice would you give to someone like that that's being affected by what's going on right now?
Yeah, I mean, right now is times that we've never seen. I mean, not in my lifetime. We've ever been in, an epidemic like this where things are spreading. And, I have close friends in the medical world that are, emergency medicine doctors and stuff like that. And, they're saying it is something that, this is spreading. I'm not an expert. I don't say to be by any means. I mean, we all know something. We all know nothing at the exact same time. But if I was giving advice, I mean, especially financially, if you have lost your job, if you are been laid off, if any of those things are happening to you, I mean, all businesses are going to take a hit regardless if it's our business. I mean, I've already seen people that said, hey, I can't afford to pay you guys this month. I have to wait on fixing my credit until, because we do charge a few $100s to fix people's credit. They're like, hey, let's put this off a month. So we even see the effects. But if there is something where you're not going to be able to pay your bills, I mean, I would absolutely call the creditor directly and just negotiate with them and let them know your situation. I'm not saying that they're going to, say, hey, yeah, we'll, let you skip a payment or we'll push the payment back or put it on the back end or something. But I would absolutely be proactive in these days of reaching out. So I've heard of lots of people already starting to do that, whether it's with, where they're renting from or, people understand we're in a crisis right now and want to help you more. Company's going to want to try to help you. It's going to be, company by company what their policy is. So you're just gonna have to reach out to them to see, but don't just not pay and then on the back end hope that they just overturn it and change it. That'd be a mistake in my opinion.
Right. And so in your experience though, in the call centers where we're calling into to make these claims, will they keep notes and for someone to refer to the file at some point?
I'm not sure. I mean, I'm not in any of those call centers. So I know, I mean, I've heard of people calling in to, like I said, not just for their credit, own their credit cards and things like that. I'm sure each company will have a policy. Will they keep notes? I'm not sure. We keep extreme notes with our client management system. So I have to imagine that they have similar type things in place. So, for us, we have notes, timestamp everything, whether it's an email, a text message, any of that stuff that's happening. We keep all that, exclusively timestamped. So hopefully they're doing the same thing.
Okay, got it. So, guys, folks that are watching this right now, thank you for participating and joining. Just want you to know, like this call today is not necessarily for credit repair. And folks, Pete, I think sometimes people hear repair and they think it's like gloom and doom, and it's a very bad thing. I've referred clients to you that have a 700 credit score. That want to go to a 720, and that's a big deal for them in regards to an interest rate. There, it's just, I want everybody to know, what we're doing here today is just setting you up to win these strategies. And so, Pete, can you tell us, before we close, number one, how can folks get in contact with you, what your process is, and any parting words in regards to the three things that we mentioned today?
Yeah, no, absolutely. To get a hold of us, it's really simple. If you want to email me, it's going to be Pete at mycreditguy.com. So once again, Pete at mycreditguy.com. You can find me on Facebook as well. It's just My Credit Guy, Pete Eggers. I have a group on there you can follow. We put tips up there time to time, share success stories, do some videos, speaking things like this to kind of just help educate. Really, that's the whole point of the Facebook page, the My Credit Guy Pete Eggers page, just to educate people, help them keep up to date on what's going on. And we have lots of lenders drop in on there just to, share some wisdom too. So, but overall, we do full service credit repair. So we're not someone that is just telling you what to do. We're not just doing blanket disputes with one size fits all, reasons, why they're doing that. We actually interview clients. We give them a free credit review. We'll educate you, step by step, based on your specific situation. So whether you need something specifically to get to a certain level to get a better interest rate, we work with clients that are in the 500s, that have 5 to 10 negative, 9 rated items on there. We work with clients that are in the 600s that have maybe 1 or 2, or even the 700s, just giving some advice on utilization or giving tips and tricks to kind of get them maximize the scores as much as possible. So I do think, like you said, for us, it is a misconception. They think credit repair is this like scary thing, and it's really because of the last couple decades. There's been a ton of companies, and there still is a lot of companies that are just trying to take advantage of consumers' lack of education, or people can't really figure out credit unless they talk to someone that can give them the straight up on what's going on. So really our goal is to educate, help people understand, what's going on, and make it really a seamless, transparent way that they can follow their credit. If they do need to work on negative items, obviously we step into play. The average client works with us for usually 3 months, and it's not 3 months just pulled out of thin air. It's like I just said, our process is trying to make sure that they can verify those debts for our customers, because we don't want them to pay anything that's inaccurate, or have inaccurate dates on stuff, inaccurate amounts. We want to make sure everything is exactly the way it should be before we start doing any negotiations, in that second or third month. And then unfortunately, we need to help give people resources. If they don't have any credit cards, we have 2 good sources to help them open up secure cards. That's cost only $200. Because a lot of people are lost, when they're like, I can't even get a credit card. I can't build credit. I'm a 550. I'm a low, I'm 620. I can't even get a credit card at my bank. They want me to be at 700. It's like, there's solutions for all this. It's just being educated. So I appreciate, though, jumping on today. I know it's interesting market wise, the stock market going everywhere and rates. I urge everyone to just be educated as possible. Be safe out there, take precautions. If you're young and healthy, look out for other people. It's really about prevention right now. And financially, it's the same way. Be educated about, where, your financial situation is, whether it's credit or, budgeting right now for what might be coming ahead for business wise, stuff like that. Just be safe and be educated.
Awesome. Thank you, Pete. You took everything I was going to say. Thanks for that. But, until next time, again, everyone that joined us today, we really appreciate it. We're going to go ahead and sign off, and you can get us again next Thursday at 2:00. We're going to do our very best every Thursday to do these calls at 2, because I think it's very important to bring professionals in front of you so that you understand and have access to our relationships that we have. But, everyone stay safe, try to be as healthy as you can be. And like Pete said, just help someone else out when you can. Have a great day, Pete. Thank you again.
Yep.
And we'll be talking soon.
Good to see you as always, buddy. Take care. We'll see you soon.
Okay. Bye-bye.